Hello again. I wanted to talk today. Hello again. I just wanted to make a very short video. Let's hope it's gonna be short. About inducements and how to identify them. Okay, so this video is gonna be called the rule of thirds, and it's gonna be like this. Why the rule of thirds? So 1, 2, 3. Where is your inducement? Here. Okay. 1, 2, 3. Where is this pattern on the charts? Let's see. Let's take this off. Let's just see. Can you see the 3? I'm gonna show you. So first of all, we are right now going up. Higher high, higher low. This is, yeah, higher high, higher low. So now, so as you can see, this is mitigated. This is mitigated. So the last point is this. This is not mitigated. Like, okay, now it got mitigated, right? But if you imagine that you don't see this, okay, I don't have the replay tool, so I can't do it right now, but just imagine that this is still free. So higher high, higher low, higher high, higher low. So now we have a higher high, but now what do we have here? We have, first of all, this is a liquidity creation. Whenever we have a very big rally up and then a sideways market, it's building liquidity. And where is it building liquidity? It's building liquidity below here. Okay, it's taking liquidity from the highs, taken, and it's leaving this zone open. For what? For them to take it out and mitigate this candle. Okay, this is like the big picture, but now let's see the smaller ones. How can we identify the little moves? So now, the little moves, the rule of thirds, I call it like that because how can you identify the inducements if you don't see this? This is not seen, okay? We only see this. Let's say we only see this. These 3 moves, okay? Market usually moves in 3 stages like this, 3 moves. Okay, so if we know that this is our inducement, the second leg is always the inducement, okay? So this is our inducement. So where can we expect a move higher? From where? Below this inducement. Below this inducement, okay? And what is the closest place to the inducement? This breaker. Okay. This. And that's where it went up. But as you can see, it still went down. And why did it do that? Because it created another 3. And I'm going to show you. First of all, whenever you see, I call this SNR, because whenever you see a move up from a breaker or support resistance zone, it usually becomes the inducement itself. And what do we have now? We also have a three-ways pattern. 1, 2, because it took this low, so now this is the new low. And 3. 1, 2, 3. So where is our inducement? The second leg. The second leg is our inducement. And now the breaker is taken, it is mitigated. We have a new inducement. We have a three-ways pattern up, and we have an unmitigated order block here. So where can we take the long from? Obviously, from this. Of course, this is hindsight, but I have to use it because otherwise I can't explain. So where can we take the TP? The TP is going to be this high. That is your closest TP. Okay. Even if the price moves up, don't think about it. Okay, because the price can also take it by a pip and move down again. Okay, and if you waited hoping it's gonna go higher, you're just gonna sacrifice all the profit. So at least take 50% here, at least. Okay, as you can see, the price went up and it never came back. It just went down again. Okay, and this is live market. So now, this is basically what I wanted to tell you. Always see the price in three ways. Try to see the price in three ways. And as you can see, this one, excuse me, this three ways was taken by this candle, and it created a bigger three ways. And then this three ways was taken by this. So there is complete mitigation here. Okay, complete mitigation and the move higher. This whole thing was just to create more liquidity for this huge move up. Okay, this is all just liquidity creation, but you have to understand that each move for you to know that you can take the long from here. Do not go in somewhere in here just hoping you're gonna go up because there's a huge bar like usually beginners do, right? They see a huge move, oh, I'm gonna get in. No. And why did we get this move down? Also, because we took this high. That's another story, right? But when we only move up, when we take out liquidity, we take out liquidity with this candle, and we move up. So this is also liquidity above this high. There are stop losses. We take it with this candle and we move down. Can you see that? Take out liquidity, move higher. Okay. Also here, we take out this, move down. We mitigate this, and we move down. So usually what happens is we take something out, we create liquidity, we mitigate that high, and we move down. We take this, we mitigate this, and we move down. Why did we move down from here? Because we have this candle here, and what is this candle? This candle is an engulfing candle. This engulfing candle took the high from these two candles. You can't see it on the line chart, but you can see it on the regular chart. So this candle engulfed this candle and this candle, both of them candles. So we were moving down, and then suddenly this candle took out this high and moved down. So that is basically this move. We are going down, but then this candle took out and went down again. Okay, so this becomes, this candle, this one candle becomes the engulfing candle. If these are two candles, this one engulfed both of these. Okay, can you see this and this? This candle is this engulfing candle. And I'm gonna draw you what happened there. It went back to the SNR line, to the breaker zone, right? It went down again, and it went to mitigate it properly, and then went down. So this served as inducement. This one now serves as inducement. And also this low is also an inducement. Why? First of all, the rule of thirds. 1, 2, 3. This is an inducement. But also, if you think logically, people that think that we are still going up, where are they going to long? From where? Where do you think they will long? They will just continue this, and they will think, okay, I'm gonna long from here. That's not what we do. Don't do that. But I'm just showing you their thinking and why this works, why this is an inducement. Not only the rule of thirds, but why is this an inducement? Why? An inducement means that it's a place where people are gonna enter and they will get taken out. That's an inducement. You understand that? People think that we are gonna go long from here, but we take them out. This is an inducement. This is an inducement because we take it out and then move up. Only then. What is here? We break this first high. It's an inducement. We take the stops from here and from here. We take the stops and we break this low and we create this high. And as I said in the previous video, the first high after the break is always the inducement. And what do we have? The highest candle is this one. So this is your entry. This is just liquidity creation. And now you have to understand one thing. I know I'm talking a lot, but just take it all in. It's all the same thing, basically. It's just taking out stops and reversing. As you can see, I don't really think about BOS or something like that, because if you think that this is a BOS, you're gonna long from here. But no, think of every high as just liquidity. It's nothing more than just money. This is money. This is money. When you start looking at the market from this perspective, that this is all just money and reversing, money and reversing, money and reversing, you start to realize there is no break of structure, because there is really no structure. The only structure I'm talking about is the three ways. You have to identify that. That is your structure. Yeah, but that's not really structure. Yeah, it's just a move. It's just a move. And this high, lower, high, break. This is the only time where I say, okay, this is a break. And it's a break only because we have to identify the inducement after the break. And this is the first inducement after the break. Yeah, but that's it. Like, and this is a liquidity creation. This is just liquidity creation. You see how many wicks there are. It's always like that. It breaks, it creates liquidity, it comes up, creates this high as an inducement, as this high. That's also an inducement. It's just like equal highs. It's just more liquidity for them to take it out with this huge candle. You know why this is such a huge candle? Because they absorbed all this money from these both highs. Okay, bam, huge move down. So always think, money, we reverse, money, we reverse. Okay. And this is just this pattern. Also, where we have to look at structure, but it's not really structure, it's just this pattern. It's just a pattern. Okay, I'm gonna show you. It's one pattern that repeats itself just a lot of times. Okay, this is a very good pattern. Whenever, I would say it's like this, we take out, we have this as a high. This is real secret, guys. This is not just smart money. This is something that exists every day, as you can see right now, live market. Okay, we take out a high. Okay, we take out a high or some other inducement. Just we take out some high. Okay, we take out the high, and you look for this pattern. First of all, we have to go down. Yeah, that's the deal. If we want to short, we want this to go down. Okay, so we wait for this. And what is here? It creates. So this is mitigated. This is mitigated. And this did not mitigate this, but it created a lower low. So this, as you can see also, 1, 2, 3, what is the inducement? this is the inducement. This is the inducement, and this candle took this high out and it mitigated this candle fully. Okay, so here, what did this mitigate? It mitigated this wick. Okay, because as you can see, these candles, this candle did not mitigate this wick. This candle mitigated only this one, but this one stayed open. So this candle came and mitigated this, taking out these stops, took out this and mitigated this. So next up, this becomes the place for the mitigation. And as you can see, this high also, when it came up, it's an inducement. And why? Because it did not mitigate it. Whenever you see a high like this and it did not touch, like it's maybe half a pip, I don't know, let's see how big it is. So that's, I don't know, this is Bitcoin, so it's maybe half a pip. You can be sure this is an inducement, and there will be another leg up to properly mitigate this, because this becomes the order flow. This was mitigated, now this has to be mitigated. And it did, it came back. Okay. So this candle mitigated this and broke down. It broke down, okay? And now, usually, you can just enter right here with a stop above. It's never gonna be the same. So usually you can just, the problem with this is it shut down a lot, okay? There's huge momentum here. That's why it went. That's why it took so long creating another liquidity to come back. But if this candle closed and it came back like this, you would just enter here, right here. This would have been your entry. But since that didn't happen, whenever you see a huge move, it cannot just come back in one move. It has to create additional liquidity, because the move is so big, okay? So usually you can just enter right here. But in this case, what it did, it went down a lot, then created a new high here, and then it mitigated properly. Okay. And then went down. This is what happened here. So now this is your entry. Okay, this is very important. Nobody talks about this. Really nobody. So take this and learn this, because this is the real confirmation entry. This is the real confirmation entry, I can tell you. And of course, these are patterns for selling. Yeah, I usually sell, but as you can see, you can also buy. And there's a trick here in TradingView. You can just right click here and invert the scale. So now you can practice the same move, as you can see, rule of thirds, high, high, high. This is the inducement, and we long from here. Mitigation, mitigation, high, low, high, inducement. We can take a long from here, even. We take a long from here, then this becomes your next zone to mitigate. Yeah? So this now looks exactly like this, right? Boom, 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 boom. First of all, 1, 2, 3 here, and then the bigger 1, 2, 3. Okay, and remember, whenever we take a long from an SNR zone, it automatically becomes the inducement, because also, why did it first go to here? Also, why did it can't mitigate this in one move, the same as this? Because this move was very high up. There is so much space here that it needs to create additional liquidity. Same as here, there is so much space that it needs to create additional liquidity. This high and another this high. Okay. Remember, if it creates space, it will create another liquidity here. If not, it will just do this and continue lower. This is your entry. So why did we take also here? Because this would be like your risk entry. Because you see that there is an unmitigated zone here. There is a high that created a low that did not mitigate this zone. So automatically you think, okay, it's probably this pattern. Okay, it's probably this. So what can we do? We can just long from an entry from here, like this one. But then once it breaks, now you have this confirmed. Now this is even better. Okay. I think this is enough. Remember the rule of thirds. This is an inducement. How to identify an inducement? Rule of thirds, and also the first high after a break. Okay. The first high after a break is an inducement. And also, inducement can be anything actually. Okay, even this high acts as inducement here because we took the high, we took the stops, and we reversed. So I'm not gonna tell you anything more, but remember this, and remember this pattern. And remember that we only reverse after taking out stops, after taking out stops, after taking out stops, after taking out stops. And that if there's a huge move down, this is also our inducement. It will create additional. Okay, this was 30 minutes. I said in the start it's gonna be short, but you know me, I'm gonna tell you everything, so I'm not holding back anything. I'm gonna tell you everything I know. I hope you understand this. Rewatch this video if you need. Go to the charts, look for this pattern. And I might say also, this pattern can also present itself on the line chart. If you don't see this on the candles, you might see this on the line chart. Like, for example, here, we did not see it on the line chart. We didn't. Here it just looks like a mitigation to a mitigation to this mitigation. And probably this would have also been a good trade if you just took this as a mitigation. This would have also worked if you just followed the order flow, that this is our inducement, and what is above our inducement, it's this. This is the only place. So if you took a trade from here, that should have also worked. And as you can see, it did. So whether you took it as a manipulated high or as a line induced order flow, it worked. Both of them worked. Okay, and your first partial is always this first high or the first low. This is guaranteed. Even if the price reverses up, you know that you got your money. Okay, I'm really gonna stop now. This is a lot. Okay, so have a great day, and we'll see you on the next video. Actually, no. As you can see here, what did we build here? We built liquidity. What do you think this is gonna happen now? What do you think is gonna happen? This is all gonna get taken out. And what happened here? We also built liquidity. Okay. And what happened? We took it out by this move. And what did we mitigate? We mitigated this. We mitigated this. Because this took out this inducement. We also have additional liquidity here. And this can now move up. Yeah, so I just wanted to update this chart. As you can see, we have moved up. We have taken out all this liquidity. And as I said before, we took the stops here, moved up. But this move was very, very high up. Okay, so this is a lot of free space. We cannot just come down and take it because there is no liquidity here. There is no stops. So that's why this happened. You get it? This is our entry zone. But then we came down, and this is also an inducement. If you see that there is a lot of space, but this is the only place where we could go up. it means it is still valid, but it means that we will create more liquidity to take it out. So this becomes more valid if you see liquidity creation right before your POI. It creates liquidity and takes it out. And also this side, that's why the move is so big, because there is a lot of liquidity here and there is nothing to stop it here. The only place where we can stop something is from here. That's why it stopped here, but that doesn't mean we're gonna go down. It's just an obstacle right now. Okay, so this just, I wanted to update. Okay, bye.